Managing Director as well as CEO of Fino Payments Bank, who joins us on the show to discuss the past quarter's numbers. Hi, Mr. Gupta. Morning. Thanks so much for joining in. Well, the street has read these numbers quite positively. Give us a couple of details. Do you expect business momentum to continue going ahead? And how do you see spends, pan out from here on? Are you seeing some traction in debit cards?
So, good morning to you. The numbers have been quite well. On the revenue side, we have grown by 22%. We reached 130 crores of top line this year. Our PAT has grown by 52%. We have reached 65 crores of PAT. Our cash profit has grown to more than 100 crores, 118 crores, which is 38% growth. Our EBITDA is now 136 crores, with a 61% growth. On the spend side, I think we are seeing good traction on the spend. One parameter for us is our debit card, is our deposits increasing, because more the spend, more the deposit. So we have seen a 66% growth in deposits to 1,200 crores. Our average deposit has also grown by 11%. So that's a good traction. On the debit cards, yes, the debit card growth has been nearly from 1,500 crores 4 years back to 7,000 crores in this year. Average debit card has also grown from 2,500 to 3,000 rupees now on average transaction. So we believe, looking at the trend in the debit cards as well as the savings, we believe this trend is going to continue and continue more positively.
All right, so let's put some numbers to that. Sir, just wanted to understand. One, you said the last time we spoke to you, close to around 275,000 members is what you're adding, new accounts of what you're adding every month. And that reflects in the fourth quarter overall additions of close to around 8.3 lakh additions. Is that number likely to move higher to say 3 lakh? What's a sustainable target for FY24? And at the same time, while your debit card, numbers have increased, the spends have actually halved from the same time last year. So what is the average spend that we should be looking at for the next foreseeable future?
So on the first part, we believe the growth will continue. We also believe that the debit card spend, which has grown from 2,500 to 3,000 rupees now, is a sustainable growth number, so to say. On our business, on the PAT side, we continue to believe the PAT will continue to grow from here. Our own channel business has grown from 62% to 67% as such, which is a testimony to the fact that we are growing our own business per se.
Right. And you said that the 3 lakh number will continue, right?
So on the CASA side, we from 2.5 lakh on an average, we have now reached 2.75 lakh. That's where it is 8.3 lakh accounts in the quarter. We expect that number to grow, maybe reach 9 lakh number in the next 2-3 quarters from here.
But you haven't given us some details, the subscription revenue. You haven't broken it up for us in terms of new subscription and renewal, something that you would do in the earlier presentations. That's one. And even the CMS business, you haven't given us the net revenue and gross margins there. Could you update those numbers for us?
So on the renewal business, we have seen a 141% jump in our renewal Q4 numbers to 25.5 crores in this year. On an overall basis, the number has grown to 73.1 crores, which is a 167% growth, which is there. That's on the renewal side. On the CMS business, our throughput has substantially jumped from, it's now 186 clients we have. 46,000 crores is the total throughput which is there. That's a 93% jump on a year-on-year basis vis-a-vis last year. And now CMS contributes 8% of the total revenue compared to 6% last year.
What I wanted to know is the net revenue in your CMS business and the gross margins there.
So the net revenue and the gross margins is more or less stable. It's been around 0.22%. The take rate has been there. And that 0.22 continues to be stable with the week Q3 to Q4 as such. One point which is important to note in the CMS business is earlier we used to have nearly 85 to 90% of our business coming from NBFCs and MFIs. Now that number has gone down to 55%. So we have much diversified our CMS business. We include now e-commerce, logistics, banks, CRA companies. So on an overall basis, the take rates have been stable. The gross margins, the net margins have been stable. The growth has been substantial. And more importantly, that the diversification in the customer profile has been there. And that is a very positive signal, the way I look at it.
All right. Finally, quick couple of numbers before we let you go, sir. First one is on account of your target cost to income ratio. What are you looking at? And the corollary to that is your own margins, because CMS and cash account for nearly 30% of your revenues. How much does that go? And as a result of it, what are your margins likely to be?
So on the cost to income ratio, we were at about 37% in 2020. Now this has come down to 26%. Our target is to be below 25%. So we will continue to work on that. And as you can see, there has been a substantial drop of nearly 10-11% in the last 4 years as to cost to income ratio. On the other question on your, can you repeat the second question, please?
Margins.
So on the margin side, we are at about 32% odd net margin as such. We believe we should be in that, continue to be in that same range, largely because of the fact that our CMS and CASA business has been growing substantially, and that's a better margin products. And our own business has also reached 65 to 67%. So the net margin percentage should be around 32 to 33%. That's the range at which we should be looking over the next 1 or 2 years as such.
All right. And finally, before we let you go, we spoke to you about you wanting to become a small finance bank in the near future as the term comes by. How do things change once you become a small finance bank? How does your business prospect come about? I mean, do we see an expansion in margins, expansion in business?
So first of all, payment business, when the way we look at it, from payments we have moved to liabilities. We have started to do credits on with partnerships. So we are trying to bring all the banking services to our set of customers. Having said that, we believe the payments business is the business which will be sustainable over a longer period of time. We definitely want to look at credit because that completes the cycle and the customer demand is also there. As far as SFB is concerned, once you apply to SFB to RBI, you get the approval. You can look at higher margins coming from the lending business per se. Lending business also results in a higher liability businesses. As you can see, without a credit business, we have still been able to raise our liabilities to 1,200 crores. The benefit of SFB is the ability to raise low-cost deposits, and that's what Fino has demonstrated in the last couple of years. And we believe with that strength which we have on the liability side, as well as the distribution platform which we have built, once we start to look at credit as an SFB over the next couple of years, we'll be able to look at a higher margin.
All right, take that point. Thanks a lot, Rishi, for joining in, giving us all those details. That's the number of Fino Payment Bank. The management believes that the margins will sustain around the 33% from here on account of higher contribution coming in from CMS and CASA. At the same time, they could look at higher margin businesses once they turn into a small finance bank. Take a short break, come back on the other side.